Next, let's look at protection. I will cover a brief outline of the protection market, followed by the post-lockdown market conditions, and end with the importance of staying protected and a few tips. The protection market. Protection is fundamental. It may not be one of the most exciting of subjects, but is an answer to one of our most basic desires, to keep safe all that we hold dear. And good health is arguably our most precious asset, and with it comes the ability to earn an income. But it is not something we can take for granted. One very important question everybody should ask themselves is, what happens if you are unable to provide to your family due to an accident, unemployment, serious illness, or death? Take a moment to think about this. These are not nice topics to think about, but the consequences of doing nothing could be even more uncomfortable. Without the right protection, losing all or even part of your household income could result in significant financial difficulties for you and your family. With the appropriate planning and having financial protection in place, you can ensure that your family's income and lifestyle are safeguarded if the unexpected happens. You've worked hard to provide for this family. Now make sure that they're protected should the worst happen. There is rather an old but still relevant opinion that people are happy to insure their house, their car, or their holiday, but not the thing that pays for it themselves. Let's face it, insurance is not the most exciting topic compared to your new car or your exotic trip, but it is a very important part of anyone's financial planning. Let me explain to you with a simple but effective example of 4 boxes. One with your TV worth £1,000, then the car worth £15,000, then the house worth £500,000, and finally yourself worth ? We will insure everything but ourselves. Ask yourself, what are you worth? I'm sure a lot of you cannot put a value to it. For example, take an average yearly income of £40,000 over a 45-year working period. That equates to 1.8 million shillings. Are you worth that? Sorry, 1.8 million pounds. Are you worth that or more? This is based on very conservative basis. So your worth is much more than the other items, but you choose not to cover yourself, but cover your TV, your car, your house, your holiday, and your mobile sometimes. Remember, it is you who has facilitated the existence of the TV, the car, the house, and other things you own. Without you, none of this would have been possible. It is a common misconception that the state will look after us from cradle to grave. The truth is, if you or your loved ones become reliant on state benefits, your standard of living and lifestyle will suffer. You could end up living in poverty. There is a lot of different financial protection policies with different options available on the market in the UK. Expert advice is invaluable in helping to design a protection solution that meets your individual needs as well as your budget. In this forum, I will cover the common ones briefly. Term life insurance. It's not for you, it's for them. Life insurance is for your loved ones to make sure there is a roof over their heads and food on their table. It's to ensure that they can continue to do the things in life you'd want them to if the worst happen and you weren't around. Life insurance is a simple contract that provides either a lump sum or a regular income over a specific term. The contract can be written either on a joint or single life basis. The types of cover is usually used in the event of death of a breadwinner and will cover debts like paying off your mortgage or provide dependents with a lump sum to invest or a regular income to help maintain the family's standard of living. Many policies include extra benefits at no extra costs, such as remote access to GPs, second medical opinion services, and other expert support services to help with physical and mental well-being. These could be invaluable over the coming months. Term life assurance can also include whole of life insurance. Whole of life insurance pays out a lump sum whenever you die and has no fixed term. It is often used in inheritance tax planning, where it is taken out to cover future inheritance tax liabilities or simply to leave a legacy asset for your family. Next, we'll look at critical illness cover. Critical illness pays out either a lump sum or a regular income should you be diagnosed with a specific critical illness which has been pre-agreed from a list and which occurs within a specific period of your life. You do not have to die from the illness to receive the payout. This type of policies can be useful to cover debts like paying off your mortgage, getting private medical care, maintaining your family's lifestyle, or simply using the money to modify your house to accommodate your disability or illness. Whilst we all worry about the impact of coronavirus, every day people are still being diagnosed with cancer and suffering from strokes and heart attacks. These haven't gone away, and the impact on people's lives have been devastating both health-wise and financially. Critical and serious illness policies are designed to help you and your loved ones cope if you are diagnosed with a critical illness. Given that 1 in 2 of the population are expected to suffer from cancer during their lifetime, critical illness provides invaluable peace of mind. Next, we'll look at income protection. Income protection provides a replacement income should you be unable to work due to accident or sickness. Typically, policies will cover up to 65% of your income after a specific period of you not being able to work, i.e., a deferred period of 1 month, 3 months, or 6 months. But some have shorter periods and can even pay out from day one. These policies will normally continue paying out until you return back to work or retire or at the end of the policy term. This would enable you and your family to maintain your desired standard of living. Next, we'll look at accident, sickness, and unemployment or mortgage payment protection insurance. These policies are designed to cover the cost of your mortgage and other expenses, key expenses related to mortgages, in the event of you being unable to work due to accident, sickness, and in some cases, unemployment. Next, we'll look at private medical insurance. Private medical insurance will cover the cost of specialists, surgery, accommodation, and nursing bills in a private hospital or in a private ward in an NHS hospital, including drugs and x-rays. You will get much better facilities. This is my best, tastier food, and a private room, often with a phone and a television. Generally, policies do not cover the treatment of long-term illness that cannot be cured. For example, asthma, diabetes, or multiple sclerosis, or any pre-existing medical conditions. I'm sure you all agree that at the moment, our NHS is probably one of the best in the world. Next, I just want to briefly look at business protection. All employees of a company are important, but the death or serious incapacity of a director or key person in the business can have devastating effect on the smaller business, which might rely on that key individual to keep it running. There are several different types of policies with an array of options to cover various circumstances. But a key man policy, for example, can provide a cash injection to a business in the event of the loss of a key person. This money can then be used to hire a temporary replacement or to help cover the loss of profits until a new person is in place. A variation to the above include shareholder protection and business loan protection. For business owners or those who operate through a limited company structure, there are tax-efficient ways of obtaining life cover by ensuring most tax-efficient way of paying premiums from pre-tax profits rather than post-tax income. The policy is put in an appropriate trust. Payout goes to the beneficiary, no inheritance tax to pay, and does not form part of your lifetime allowance. I personally gave this type of a policy my own name, high net worth death in service. So
Ashit,
these are
sorry,
just...
can I just make a point? When you're moving, your words are being eaten up. Can you just speak into the mic and a little bit louder, please? Thank you.
Okay.
Sorry.
Sorry about that. I hope that is better. So these are just an indication of the types of cover that can be taken out. It is not an exhaustive list. We recommend that you speak to a financial advisor who will be able to recommend a solution that meets your individual needs and your budget, as well as answering any questions you may have. I just want to cover a bit on death in service benefit, especially for those who are employed. What is death in service? Death in service cover is paid out by your employer if you pass away while you're still an employee. How much money your dependents get from the death in service cover depends on the package. But in most cases, it's worked out based on the amount you earn. Normally 4 to 6 times your salary from your employer. Most of the time, the money paid out by death in service cover isn't received directly by your loved ones. Instead, it gets put into a discretionary trust, and your survivors will then get the death in service benefit from the trust. This means that the trustees, usually your employer, will have the final say on where the lump sum goes, but your wishes will be taken into account. It's a good idea to write an expression of wishes or a nomination of benefits letter, letting them know who you'd like to receive the money if you pass away while in that employment. Unlike with life insurance, you cannot nominate death in service benefit to pay out directly to your mortgage. Your survivor might use the money to pay off your outstanding debts, but it's a good idea to have separate life insurance just in case. How long does it take to pay out the death in service cover? Normally, it would be paid within 30 days. I've seen cases paid within 2 weeks also. One major factor that can slow down the death in service payout is missing paperwork. If your benefit is paid into a trust, and there should be a document such as an expression of wishes or a nomination of benefits letter telling them who you want the money to go to. This will help ensure that your loved ones will receive some assistance as soon as possible after you pass away. Do I have death in service cover? Companies aren't legally required to offer death in service benefit, so not all employers will give you cover. Sometimes death in service is linked to the company's pension, which means you can be an employee without receiving death in service cover if you're not signed onto the scheme. It's a good idea to contact your human resources department for more information. They'll be able to tell you what's on offer and whether you're eligible. Do I need life insurance if I have death in service cover? Even if you already have death in service, it's a good idea to have life insurance policy at the same time. Death in service cover usually ends up paying out to the loved ones, but there's always a chance that something could go wrong. Life insurance can give you the certainty that your survivors won't be saddled with money problems if you pass away. Most insurance advisors usually recommend cover that pays out 15 to 20 times your annual income. That's a lot more than even the most generous death in service benefits. The money paid out by death in service cover might seem quite a lot, but it can be easily eaten up fast if your loved ones have to pay off your mortgage, and the cost of a funeral can run into thousands of pounds. Life insurance can make sure your dependents don't have to face extra costs and stress during an already stressful time, and can continue to maintain their standard of living comfortably going forward. You can use life insurance to top up your death in benefit, death in service benefit. For instance, if you earn £40,000 and your death in service benefit is, say, 4 times your salary, that's £160,000, you could, for example, take out life insurance policy worth £440,000 to give you a total payout of £600,000 or 15 times your income. This is just an example. There is no one size fits all and will depend on individual circumstances. I want to give you a word of warning about death in service benefit. It only pays out if you're still employed by the company when you pass away. If you change jobs, take a break from your work, or go into self-employment, you will lose that death in service cover. Another crucial point to remember about death in service cover is that upon payout, it forms part of your lifetime allowance, which could have tax consequences. Let me cover a bit about post-COVID-19 market conditions. In protection, we've seen a number of changes to income protection and mortgage payment protection insurance policies, with the withdrawal of short deferred periods options and the removal of unemployment cover. All insurance companies have now included additional questions in their application forms relating to COVID-19. If you have COVID-19 or have symptoms or have been advised by your GP or 111 to self-isolate or have come into contact with someone who has symptoms, then those applications will be postponed for between 14 to 30 days. Due to the social distancing and the current lockdown situation, providers are, in many instances, not able to obtain medical evidence such as GP's report or carry out nurse or medical screening tests which used to happen at clients' houses. The providers have differing sum assured limits for life, critical illness, and income protection before medical evidence is required. So you can still get cover without the requirement of GP's report or medical examinations. Most insurers have reduced their non-medical limits, and the amount of cover will depend on your age and the state of your health. This is changing regularly, with one insurance company now piloting screening tests done remotely. So they send you this test kit to your house, and you carry out the tests, and they guide you via video calls. Some insurers have also started asking for medical evidence from GPs, and GPs have started responding, albeit slowly. Some insurance companies have removed immediate cover benefit for life cover and critical illness cover. What that means is, normally, whilst your application is being underwritten, the insurance company provides you with free cover up to the point a decision has been made on your application. So this cover has now been removed by some insurers. Importance of staying protected during COVID-19. Coronavirus is having a huge impact on all of our lives, and it goes without saying that this must be unsettling times for everyone. Not surprisingly, we've received a number of queries from our clients in relation to protection cover and claims, which I have made every effort to provide answers to the most commonly asked questions in the following frequently asked section. Firstly, am I covered? Providing you have paid your monthly premiums with your insurer, your cover you have remains in place, and the terms of it are unaffected by the coronavirus outbreak. If you have missed any recent payments or recently canceled your policies, then get in touch with your financial advisor who may be able to reinstate the policy or get you protected again. The exact terms of reinstatement vary by insurer. Can I take a premium holiday? At the moment, insurers are not offering the same facility as lenders are doing, meaning allowing you to defer premium payments. However, there are discussions with the major insurers on this issue. So it is possible that the position may change, but there is no guarantee that it will. If you are in a position where you are worried about able to afford your premiums, then please get in touch with an advisor as soon as you can, as they can explore what options may be available to you. I cannot, however, stress enough that whatever you do, you should keep your existing policies in place and take advice before taking any further steps. For obvious reasons, now is not the right time to be without cover. Canceling your policy with the expectation of reinstating it in a few months' time when your income position is more stable not only leaves you without cover at this critical time, but would also mean you would need to go through medical underwriting all over again. It is possible that insurer terms and conditions will also be tightened up in the future, so you could end up with an inferior policy to the one you currently have. In fact, I tell a lot of my clients this is the time to go through your bank statements with a fine-tooth comb, and rather you cancel, for example, subscriptions for non-essential items than your existing life insurance cover. You might be surprised to find things you have been paying for that you hardly or don't even use. Next, Will my insurer pay out if I die from coronavirus? The good news is that the vast majority of people who catch the virus go on to make a full recovery. If you were to die, then assuming the medical information you provided at the inception of the policy was correct, then the answer would be yes, the policy would pay up. Your insurer would, however, need to go through their normal claims process to process the claim, to confirm that the claim is valid, basically. Next, will my insurer pay out for critical illness if I get coronavirus? Coronavirus is not a specified illness on critical illness policies, and the view from most insurers is that the virus is unlikely to produce the permanent symptoms or impact on lung functions required to meet the definitions evident on policies. As stated above, the evidence from the world, from around the world, is that the vast majority of people recover fully from the virus. Therefore, it is not an ongoing critical illness. If you are unfortunate enough to die, then you would be covered as long as your cover included the death benefit. Insurers will, however, assess individual cases on their merit and will always seek to be fair in their assessment. Next, will my insurer pay out on my income protection policy if I cannot work as a result of coronavirus? It is the definition of disability. If the definition of disability is met as a consequence of the coronavirus or its impact on underlying or existing conditions, then we would expect the income protection claim to be paid. Most policies do have deferred periods, i.e., a period usually 1, 3, or 6 months before which a payment is made. While everyone is currently worried about the coronavirus, it is not the only scenario that could stop you from working. Being involved in an accident or suffering from a separate illness are just, if not more likely, to stop you from being able to work. Maintaining your income protection premiums will help ensure you and your family can cope financially. Also, insurers have withdrawn deferred periods of day 1, week 1, and 2 weeks. So if you currently have a policy like this, you may not be able to set up a new one on the same basis. Will the redundancy covered in my mortgage payment protection policy pay out if I cannot work as a result of coronavirus? We would expect that any claim for unemployment will be paid for existing customers. However, temporary or voluntary redundancy or a reduction in working hours by your current employer is unlikely to be covered. Insurers have withdrawn unemployment cover from the market. So if you cancel this cover with this option, you may well find that you cannot purchase it again. The fact that insurers have withdrawn cover is a good indication that they believe the risk of redundancy claims over the coming months is likely to rise significantly. You may know your own circumstances, but in an uncertain economic environment, unemployment cover could be invaluable. Can I take out a new policy or increase my cover? If you're looking to take out cover or increase your cover levels, please do contact an advisor at the earliest opportunity. Many insurers are tightening their medical underwriting to reflect the additional risk associated with the coronavirus. However, most insurers are still accepting new life, critical illness, and income protection cases. It is also worth pointing out that many existing policies will also allow cover levels to be increased without the need for any further additional underwriting. I know that For many people, these are worrying and uncertain times. So I hope that the information I've provided here is helpful and may answer at least some, if not all of your queries and concerns you may have. However, if it raises any additional questions or you are still worried, then please do not hesitate to get in touch through the CAT8 helpline. Before I finish off, I want to cover some tips. Now is the time to tidy your affairs. If you have existing cover, then please check it if it is adequate and relevant, or get in touch with a financial advisor to review it. If you do not have any cover, then I strongly suggest you consider taking out some form of cover. Having some protection is better than not having any. Secondly, depending on the type of policy, certain policies should be put in an appropriate trust. So the proceeds of the policy on a claim do not form part of the deceased estate and is paid to the beneficiary quickly without the need for probate to be granted. So it is the right money in the right hands at the right time. I suggest anyone with existing policies to check if their policies have been put in an appropriate trust. And if not, then depending on the type of policy, to do so immediately. If the policies
sorry.
are in...
Can I just interrupt? We only have a couple of more minutes. We need to wind up quickly because we have a lot of questions which we need to answer.
Okay, I've got about 5 minutes, so...
Try and shorten it.
Okay. So one of the most common myths about protection is it will never happen to me. I think with what I have covered so far, I can only say one thing. You are not immortal. Think again. Do you know what your employee benefits are? Check with your employer because death in service could be there for you. Is this cover enough? Would your life cover or death in service benefit provide enough help to pay off your mortgage? Please consider that and get in touch with an advisor if you need any help. Many policies also include extra benefits at no extra cost, like access to GPs, second medical opinion services. So these are invaluable at the moment. Please check your policies, and if they are included, then please make use of it. Finally, let me finish off with a quote and food for thought. Please think about this quote very carefully. Life insurance is like a parachute. If you don't have it the first time you need it, there is no second chance. And if you were to buy a parachute, would you buy the cheapest? Thank you. And we'll take some questions and answers, and I'll pass over to Rumit.